Wait a second. Looks like Target's numbers are just hitting. Hold on just a second. Let's get you these before we go to a break. Want to take a look very quickly. It looks like earnings are just out from Target. Adjusted earnings a share came in at $3.64 a share. The street was only looking for $3.49. Revenue also slightly above what Wall Street was forecasting. And then you have the comp sales. They were up 8.9%. Versus an estimate of up 8.8%. Target says that they're looking at comparable sales rising in the high single digits for the second half of the year. That's at the high end of its prior guidance and something to keep an eye on, too. The company also says that it's now looking for its full year operating income margin rate to be 8% or higher. And that's pretty important because a lot of the numbers that you watch with things coming through, I'm not entirely sure why the stock's down. I don't see any numbers here that aren't better than expectations and aren't incredibly strong. Similar to what we saw yesterday, I guess, with Home Depot and then with Walmart, although I think Walmart turned things around, Walmart shares later in the day. Let me talk a little bit more about these numbers. The comp sales at the stores were up by 8.7%. They say their comparable sales growth was driven almost entirely by traffic, more people coming back into the stores. That comps of 8.7% in the stores came on top of 10.9% growth last year. Now, digital comp sales grew by 10%. That came on top of growth of 195% last year. Remember, a year ago was when people weren't going into stores. They were buying everything online. Their digital sales continue to be led, they say, by same-day services. That's things like order pickup, drive up and pick up your things, and shipped, which is same-day delivery, where someone goes to the store, picks it out for you. They say that grew nearly 55% this year, and that, again, was on top of more than 270% growth from a year ago. And more than 95% of Target's second quarter sales were fulfilled by its stores. That's important because that's cheaper. If you're fulfilling through the stores, it's a lot cheaper than sending it through somebody else.
It looks the same. It really looks similar it really looks similar to the reaction to Home Depot.
Home Depot yesterday.
Yeah, it's like, good, and it's like the best of worlds, the worst of worlds. Suddenly, the online is not as good as it used to be during the pandemic because people are going back to stores. So that kind of lags, and I guess people look at that initially because you would think that maybe people could have anticipated you'd see a similar situation with Target, but the stock's still, it's a couple of $100 a share, so $8, $9, $10 is not that much on a percentage basis, but certainly looked like
the stock's up 80% in the last year.
Yeah, it still looks a little surprising to people that you saw the average transaction was down, like at Home Depot, too, down 3.4%. I don't know what that means. I don't know whether people...
It means that, it means that people are maybe spending less in terms of increases, that maybe the shopping basket's not as big, but they've got more people coming into the stores.
Maybe
and again, I look at this and I don't see anything bad. I don't see any bad news in this.
Maybe
the board of directors also approving a new $15 billion share repurchase program.
When they do it online, maybe they, do it for, I'm going to do it for the next month or whatever. And when they go into the store, you can go every week, and maybe it's, maybe some of the transactions aren't as big because there's not as much of the online component. But it's already
the drop in the stock has pared back some.
Already
right. It was down by more than 4.5%. Now it's off by about 2.6%.